How Trump's move will affect the market. U.S. China duties war. Today, we will be discussing one of the most interesting topics that has literally shaken up the global markets, spurred some debates, and has also put investors in hot waters. This is maybe the most important thing you will watch today. Hello and welcome. Yes, today, we will discuss Trump's latest move in the U.S. China trade war. What will be the potential impact of the increase of tariffs on China by 20% in the global market, particularly in the U.S. China trade war? And who is going to get affected by it most? With Trump's latest decision on the tariff, we have a few questions in our minds. What will be its effect on the stock market? How are the investors going to respond in this situation? Will it come crashing and affect businesses along with the common man? Or are we overthinking and it's just another bump in the road? Let's break it all down in this video and of course, look into what it means for your money. What did Trump do this time? Alright, so let's see what Trump just did this time. Well, recently he announced new tariffs on goods imported from China. 20%. We're talking about millions and even billions of dollars in goods getting slapped with higher taxes. Honestly, this is not something unexpected from Trump. He has done this in the past as well, but this particular move at this point, it honestly left everyone scratching their heads. And now you may think why? Well, because it is having a direct impact on key industries like tech, agriculture, manufacturing, and many other production companies. Let me help you out by explaining it with an example. Just think of your favorite item. Any gadget, car, even the food on your plate. Now start multiplying the price of that item with a random number. This is exactly how the costs of these things could increase. And we all know that when there is an increase in costs, consumers hesitate, thereby affecting the businesses. And guess what? The market is not quite a fan of it either. U.S. President Donald Trump imposed an additional 25% tariffs on imports from Mexico and Canada. This has led to trade battles that might create tension in economic development and boost prices for Americans who are still suffering from years of high inflation. This move, which may disrupt almost $2.2 trillion in yearly commerce, came after Trump stated that the top 3 U.S. trading partners had not done enough to prevent the flow of fentanyl and its precursor chemicals into the U.S. Here's what makes this move different from previous rounds of tariffs. It's the particular time. We know that he has done this in the past as well, and we also know that tariff happens to be his favorite word. But it's coming at a time when companies and markets were actually hoping for some relief, not additional pressure.
Be charging a discounted reciprocal tariff of 34%. I think, in other words, they charge us, we charge them less. So how can anybody be upset?
Just when the businesses were getting comfortable with the supply chains and thought that they were stabilizing, Trump decided to surprise them with another tariff wave. Here's how the market reacted. So, what happened after Trump made this announcement? How did the market react to this move? Well, it's not a surprise. The market did what it does best, it freaked out. The moment Trump announced it, the stocks declined instantly, while many tech giants like Apple and Tesla took a major hit because their entire business operates mostly on the Chinese components. Moreover, the S&P 500 also took a nosedive, and even the Dow Jones felt like their rainy days are here. Let's consider Apple, for instance. Major part of their business is solely dependent on China. Even their supply chains are linked to it. If they suddenly have to pay more for certain parts, the price of those items would rise for consumers as well, reducing the company's overall profit margins. Neither scenario is good for investors. This also holds true for companies like Walmart and Target. A lot of items are being imported from China because they are cheaper. If tariffs increase costs, this will lead to only 2 options: increase the prices, which will automatically drive away the customers, or absorb the costs, which is also not smart as it's going to eat away all the profits. Again, none of this is ideal. While the long-term economic picture remains unclear, short-term market volatility actually opens the door of opportunities for tactical investors. With a stronger U.S. currency, higher interest rates, and evolving global trade dynamics, particularly China's recent punitive actions and active trading tactics will be critical. Currency fluctuations, particularly between the yuan and the dollar, might provide trading possibilities, as could sector-specific bets in technology, energy, and consumer staples. What does Trump think and why China is not backing down? Trump supporters and Trump himself have long contended that tariffs are vital to defend American companies. They think that by increasing the prices of imported items, people will be encouraged to use products that are made in America, and it will consequently create cash for the government and put pressure on foreign nations to reform their trade practices. Now, let's have a look at how China is taking it. If you think that they are just going to accept this move and sit back, well, you are wrong. China has always been a sneaky player with its stealthy moves and tactics. It has already begun retaliating with taxes on U.S. imports. There is no lie in this that China is far beyond a passive participant in this trade war. It has its own power and is a global economic giant with enormous clout. The Chinese government has not stepped down, but in fact, they have responded to this move by purposefully imposing tariffs on major U.S. businesses that rely substantially on exports to China. In this entire war, can you guess what was one of the most significant casualties? American farmers. China was one of the top consumers of U.S. soybeans, and they were literally spending billions of dollars each year. But with these additional tariffs, they are now reducing their imports and moving to other markets like Brazil and Argentina to meet their requirements. This decision has directly affected the American farmers who were already struggling as the commodity prices are volatile and weather conditions are also not that favorable. For small and medium-sized farms, losing a large customer is like a financial nightmare. Each year, farmers spend a lot to cover equipment, seeds, and operating costs, hoping that their crop will produce enough cash to repay their hard work. But when the customers have decreased, the prices of soybeans have also dropped. Again, this means that the overall profits are low, but the debt is more. And, well, it's not just soybeans. China has also increased tariffs on pork, wheat, corn, and dairy products. And we know that it directly affects the rural communities across America. Smart move by China. In such scenarios, some farmers are taking precautionary measures, storing unsold crops, waiting for better trade conditions, while others have had to sell at sheer loss. China has also significantly boosted its exports to Southeast Asia and Mexico, where items are frequently processed and reshipped to the United States with little or no tariffs collected. Here's another thing. China isn't just using tariffs as a weapon in this trade war. They're also manipulating their currency, the yuan, to make their exports cheaper. China's central bank can actively interfere by establishing a lower yuan exchange rate versus the US dollar. This makes Chinese goods cheaper in foreign markets while making American ones more costly in China. And in this way, they will attract international buyers. Also, China also regulates the amount of money that may move out of the nation. It can better regulate the value of the yuan by limiting foreign investment and retaining more capital within its borders. This will ultimately hurt US exporters, making it very difficult to compete with other businesses in the international market. This battle over currency values is just another layer of economic warfare in the ongoing U.S.-China trade conflict. If China continues to weaken the yuan, the U.S. could respond with even tougher trade policies, escalating the tension even further. What does all this mean for you? Okay, so now let's talk on a personal level. What does this mean for you? How are you getting affected by this move? Here's what's going to happen. If you have any stocks, particularly in tech or manufacturing, then you have to brace yourself for the uncertainty. And if you're a small business owner importing from China, then here's bad news. Expect higher costs. If you don't have a business and you are just a common man shopping at Walmart, then prepare to see the prices doubled for Chinese products or any goods coming from China. Same goes for cars. Tesla, Ford, and GM all rely on Chinese materials, and this only means one thing, i.e., more tariffs equals more expensive cars. Now let's not even talk about inflation, because it actually hurts. When prices go up across the board, the Federal Reserve has to step in, and this only means higher interest rates. So if you're thinking about buying a house or taking out a loan, yep, that just got pricier too. And maybe you should not think about it during this ongoing trade war. Beyond that, this trade war can have a negative impact on the job market as well. Just imagine that if businesses have to cut costs, they will have to start downsizing the companies, which means layoffs and firing. This trend is not new. We have already witnessed this in 2019 with manufacturing job losses. Is history going to repeat itself? I hope not. How can investors stay prepared? It's easy to get caught up in the headlines, market drops, and overall uncertainty. But let's look at the bright side. Every market problem is also an opportunity. Rather than reacting to it emotionally, let's tackle it strategically. If you're an investor, there are clever strategies to preserve your account and possibly profit from the uncertainty. The rule is simple: diversify. You've heard it before, yet it's more relevant than ever. Be smart and don't invest all of your hard-earned money in one sector. Instead, You can invest in multiple sectors, especially the ones that are less likely to be affected by the tariffs like healthcare or consumer goods. Also, keep cash handy. Market declines are more than simply a source of dread. They are also purchasing opportunities. If equities fall as a result of trade concerns, it might be an excellent opportunity to get in at a bargain. In such situations, liquidity, or readily available cash, enables you to capitalize on market declines. Believe it or not, this is exactly how some of the most successful investors convert downturns into profit opportunities. For instance, in the past when markets crashed, investors who purchased solid firms at a discount earned enormous profits when the market recovered. The strategy is to have funds available for deployment. What's next? So now what happens after all this? Where do we go from here? Not to mention that Trump has hinted that there will be more tariffs if China doesn't back down. On the other hand, China is also not showing any signs of giving up in this trade war. So this only means that the market roller coaster ride isn't over yet. Or maybe it has just started. But again, this is not something new or unexpected. We've seen this before. Every time Trump announces tariffs, the market declines, and then it eventually stabilizes as well. So while it may look like this is the end of the world, we are here to tell you that it's not. There are many companies who have already started taking alternative routes and developed strategies to combat this issue by shifting production away from China to other countries like Vietnam, India, and Mexico to bypass tariffs and lower costs. In 2017, Apple overcame this issue by diversifying its supply chain operations and moving its production to India. Now, major tech manufacturers are also looking at Vietnam as an alternative production hub. But there is only one question right now. How long can businesses and consumers tolerate the uncertainty before it actually starts doing long-term damage? How well prepared are they to accept and endure the consequences? Are Trump's tariffs a daring strategic move that will pressure China into a better trade agreement with the United States? Or is it actually causing harm to the country's economy? Are the short-term difficulties worth the possible long-term rewards? Or will the firms and consumers face losses that will be too great to bear? This argument is far from done, and I'd like to hear your opinions. So, share your thoughts in the comment section below. And if you found this breakdown helpful, don't forget to like, subscribe, so you don't miss any future updates.